Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. Also, Axon has a special offer for all the Moving Iron Podcast listeners. If you go to the website, axontire.com, and you use the word sprayer, you get a 5% discount on Alliance 354 AgriFlex tires. So check that out. It's only for Moving Iron Podcast listeners, so get that 5% off those tires if you're looking for a set of sprayer tires. Also, if you talk to your rep, just say you heard it on Moving Iron and the Moving Iron Podcast, and they'll get that 5% discount as well. Also, TractorZoom delivering insights. Make sure if you go to that website, tractorzoom.com, go to Iron Comps, and if you like what you see there and like to see how to track what's going on in the auction marketplace, make sure you use Moving Iron at checkout to get yourself another discount. So, Chip, I don't know about you, but I like discounts, buddy, and it sounds like I'm passing out a few.
Yeah, there's some end users need some discounts on corn and beans right now.
Yes, they do. I don't have 5% discount on corn, but it's
exactly.
But they've got. And I'll tell you what. So typically, this is when you start putting in the start looking at kind of putting in that low for the year, and you start kind of looking at where you're going to be at. You know, your planning progress reports. Usually, you're driving the bears in to it's going to be best crop ever, and just like harvest this year, planting season is driving prices up. So, what's your reaction to everything that's going on right now?
Well, it's really a culmination of about a half a dozen things going back about 18 months, really. And it just all swung to kind of create the perfect storm, you know. And in my mind, it really goes back to, 2 years ago, planting 2 years ago, and the prevent plant numbers just being totally off the wall, right? And I think that affected the stocks numbers, and it took them 18 months on the stocks reports to kind of reflect that. And then last year, we kind of towards the tail end of the growing season, parts of the upper Midwest, we had the windstorm across Iowa, and then really across parts of Iowa, Illinois, Indiana. It really didn't rain very much at all from, mid-June on, and we didn't fill the crop out very well. And in fact, took a lot of top end off the corn crop. And, by the time it was all said and done, put in the bin, that crop ended up being, I think less than what was anticipated. And then obviously the Chinese demand situation. and what recently is driving this thing is Brazil, right? They raise a big crop of corn, a big crop of second corn, 100 plus million metric tons typically. And they export a lot of that second crop corn. And China has a big appetite, and the world has a big appetite. And about half of their growing area literally has not had any rain since they planted. And it's a catastrophic situation. I mean, it's like a 1 in 100, 1 in 200 year type of a deal for them. And there's no rain in the 2-week forecast. And, you get 3-4 weeks down the road, and it's going to kind of doesn't matter anymore, right? If they get rain or not.
Right.
Now, it's not the entire growing area. There are areas that have got some decent rain and look really good and are going to have good crops. But roughly half of that area could be a disaster zone and essentially a crop failure. And so the market's been adjusting to that over the last 3 or 4 weeks. And all that does is just raise the bar that much higher, that we have to have a perfect growing season and massive crops. And corn kind of has taken over as the leader, right? Brazil did have what appears to be a record bean crop down there, and that's helping supply the appetite of China right now. But the leader to the upside is certainly corn right now, and that's going to continue to happen. And then on top of that, out your way, Nebraska, the Dakotas, Iowa, very, very dry right now. Now that's a double-edged sword, right? Because a lot of crop has gone on the ground early, and so that's the makings for a big, big crop. But it has to start raining at some point, and so now the market's sensitive to particularly the Western Corn Belt. Over this way, Illinois is right now the sweet spot. I mean, it's couldn't hardly be any better in Illinois. Indiana, Ohio, a little bit on the wet side, and then Western Corn Belt, west of the Mississippi, a lot planted, but need rain quickly to kind of get that crop kickstarted. So the market now, with the shortfall that what looks like in Brazil, is just that much more hypersensitive to the weather here, and we haven't even got to the June, July time frame where we're going to be hanging on every weather model run. It's just going to be really gut wrenching. I mean, the volatility is going to be off the charts and unprecedented. And it's not just going to be straight up. It's great when it's straight up like this. Corn puts on 60 cents in the first 4 days of the month of May. It's not going to be like that. It's going to be 60 up, 60 down, 80 up, $1 down type of action here, I'm afraid, before it's said and done this summer.
Yep. No, I think you're right. We had this WASDE report coming up. I think it's Wednesday next week when it comes out. You're going to get ending stocks there that are going to talk about kind of what a bigger kind of another picture as to what we see happening around the world as far as stocks go. What do you think, if anything, that traders have they built in already kind of what they think is going to happen in that report now, or is it just kind of, well, we don't really care. We already know kind of what's happening.
Well, that's a good question. You can argue that with the rally, we've seen a lot of it's built in. You're also, probably the most important part of that is going to get the first new crop supply and demand estimates from the USDA. And one thing I'm a little bit worried about is that they won't start with a demand number that's as big as maybe what the market thinks for the new crop. They typically don't, and there's some economists there that are part of putting this, these WASDE reports together. And higher prices, mean lower demand. Typically, it's economic fact, and so they may, cut back their demand estimates a little bit because prices have rallied so much, and it's just a starting point anyway. They're not going to, I don't think, set the bar, massively high. They've got 12 plus months to kind of figure out what the demand's going to be for a new crop. And so, yeah, I think we're set up for kind of a buy the rumor, sell the fact type deal where, we've had such a huge rally in here, and it may not matter. It may be more about the weather. Is Brazil getting any rain? Is their 2-week forecast still dry? And is the Western Corn Belt getting any rain? Because, it ultimately comes down to Mother Nature. You can put all the projections you want out there for crop size and demand, but if it doesn't start raining in the Western Corn Belt quickly, you're going to have some issues and not have optimum yields there. So it may be an afterthought by that point in time. It is next Wednesday, and but I think it opens the door up to the official, quote unquote, volatility season, because then you're getting close enough to June. You have a 2-week forecast that every stinking weather model, there's rain, there's no rain. Yeah. Where's it going to rain? All that psychological garbage that goes with that, right? It's just going to be extreme.
What number do you think on the WASDE when they start talking about stocks and those kind of things? Where do you think that's going to play in? What number is going to blow it up for that?
Well, I think the market assumes that old crop stocks are going to get cut a little bit. You can argue that the demand. I mean, export sales report yesterday. We still sold some. It wasn't a huge amount, but
right.
Any bushel at this point is going towards increasing exports. And so I think the market's coming in assuming we're going to cut corn and bean carry out a little bit on the old crop, not massively, but a little bit. And then as you flow through that, it's not rocket science that what they do on this first report for new crop. They just use the March acreage, they use trend line yields, and then probably most importantly is what their demand assumptions are. And when you use those acreage numbers, even at trend line yield, it doesn't take much demand, and we don't have much of a cushion. So I think all that's old news, though. Really, I mean, I think the market understands that we wouldn't be as high a level as we are, but that's why I think it a lot comes down to what they're going to put for the demand estimate, right? And where their starting point is on their assumptions on demand, and it's going to be hard to get a carry out in beans on new crop much over 250 million, which is still pretty tight, and that's with a big crop. Trend line yields in beans, I think, is touch over 50, and on new crop corn, $1.3 billion, $1.4 billion. Again, not much of a cushion when you factor in 177 bushel, type of a yield, and that's a big, that's trend line, but we've only done that once, I think. And so that's a big high bar. So if you start working backwards from that yield, all of a sudden you evaporate a lot of carryout out of there. So again, I think all that's old news to a certain extent because the market knows that, and trying to factor in what's the crop size in Brazil, and what's the weather going to do here, and it's a high bar that we gotta raise a big crop to kind of build that cushion up again.
Yep. Okay, on the flip side of that, when you start looking at corn and wheat and how they correlate with each other, right now wheat and corn are tracking right along side by side each other within a few cents of each other. France came out with a new update here this morning about how they're still, they now rate 79% of their soft wheat crop good to excellent as of May 3rd, which is down, I think, a point or two from the last time it did that. So that cold snap they had is really starting to kind of be evident there. The cold snap that we had in February is going to be played out here in the next couple of weeks as custom combiners start making their way north out of Texas. I guess as you look at the wheat crop, when and what is going to trigger the market to say we do have a problem now and we need to start looking at how we're pricing this stuff, or we don't have a problem and we're going to backtrack them as fast as we went up. So I guess when you look at wheat, what's your thoughts there, and where are some chinks in the armor that we might need to pay attention to?
Yeah, I think at this stage, it's going to take the combines rolling in Kansas. It's gotcha. On the corn side of the equation, a lot of acres, but the market focuses on Illinois and Iowa, right? And in wheat, it's Kansas. And so once the combines start rolling in Kansas and you start hearing some yield reports, and I think there's a wheat tour coming up here pretty quickly. I don't know if it's next week or the week after. That'll be closely watched to kind of see, field reports of whether, there is any damage from that past winter. And so I think it's going to be actual harvest results at this point to kind of see, the damage was. And, again, now it's tied at the hip to corn as well. You're going to put, a lot of feed wheat back in the equation, because of the high price of corn. And so corn and wheat, as you said, are tied at the hip right now. And you're going to kind of increase the demand a little bit from the feed side on wheat just because of high price corn and trying to substitute, a cheaper feed grain. So it's going to be, it's an interesting deal. I think wheat to some extent is still going to be a little bit of a follower, but it can't drop too much with corn where it's at.
Right. Okay, so now let's jump over and let's talk about hogs for a minute. So, article came out this morning. I was reading about Chinese meat imports. They're still running way ahead of schedule as far as year over year goes. But the next article down talks about a big jump in hog sales for Chinese producers, and they're miraculously 323% up in April compared to a year ago. So, I mean, I guess if you sell 3 hogs before and you didn't sell any the year before, I guess that would be 300%. But they have, there's 2 non-correlating stories there that are matching each other. So I guess as you look at the hog market, which has had a pretty good run over these last couple of months, what are you thinking there moving into the summer months here?
Well, it's friendly, right? And it's I think we've talked before, right, about the information or lack of information out of China or reliable information, and what's that old saying? There's lies, damn lies, and statistics.
Right, yeah.
Something like that, and
like
none of it's true.
Yeah.
But you just got to watch what they do, and they haven't stopped buying U.S. pork yet. A couple weeks ago, they weren't there. It got the hog market shook up a little bit. Put about a $10 break in hogs. It was the first real correction we've seen, and wham right into new highs. We go ripping into new highs. Yesterday, they were there for 15,000 tons. A big number. Without that, I think it was like 38,000. So demand's there. I don't think we figured out our health problems here with PRRS. Mm-hmm. I think, a year ago, the liquidation that you saw in the livestock sector, particularly the hog sector, because of the packing plant shutdowns, in the middle of COVID, you had a lot of sow liquidation, even a lot of, market hog liquidation. And you combine that with our own health issues here, and it's explosive. And I don't think you can say there's any end in sight. I think the previous all-time highs were up in the 130s, mid 130s. Don't quote me, 133, something like that. And we haven't even hit the peak demand season yet. A lot of states kind of reopening, people kind of itching to get out and do something and eat at a restaurant, and so that demand peak likely is still going to be there. And so I think for a few more weeks here, a couple months, 60 days, something like that, you could still see hogs, maybe eventually challenge or push into new all-time highs. So all that being said, it's a treacherous time frame, right? Because you have deferred hogs at levels that we haven't seen, but you also have, new crop corn at $635 right now too. So
right.
$400+ meal. And so it's a margin deal, but it's going to get a lot more challenging out ahead of us. And it's it's not going to be an easy ride out there for hog producers, but there's good profitability right now. And, I think we really have to keep an eye on these deferreds, because as you get into late June, July, you have to be aware that, that's typically your price peak. And, if China does get their situation figured out and get things stabilized there and they back away, the cure for high prices is high prices. And, right. That's the old saying, and it's true. And you just have to be on the alert here, not only in the livestock, the hogs, but, these grains as well. I mean, eventually this thing will end. So we have to keep our eye on the target here and make hay while the sun's shining, right?
Exactly. That's exactly right. All right, last thing, and then we'll wrap it up here. Speaking of margins, right now, if you look at the cattle marketplace, cattle prices, live cattle prices have bounced all over the place. I mean, they were up in the 120, 125, 127 range. Now they're back down in the teens there, as you look at that. But also, as you look at box beef prices and what they've done here of late, they've just continued to climb. So I guess talk about what you see there. I mean, is this a direct correlation to the price of corn? and what that's looking like? Or, I mean, where's that price differentiation coming in?
Yeah, it's that is the if there is one area of ag that's not doing very well right now, it's the cattle side, right? And you talk about margins, man. The Packers have massive margins, and we just can't seem to get any traction and get this cash market turned around. In fact, the Packers seem to be holding their bids up, kind of like they did during COVID. They could buy cattle cheaper if they wanted, but they're making so much money, they're kind of holding their bids up. I do think it's going to change, and the action yesterday in cattle, maybe's hinting that we've gone low enough for the time being. Some of this is the margins, the feeder fat spreads with corn prices screaming higher. It's really pushed feeders down. Deferred live cattle have kind of held better than the nearbys. So some of this is a readjustment of the feeder fat spread with higher corn prices. I think you're maybe towards the end of that. I also think it's starting to pick up that, feedlots are obviously trying to find alternative sources of, feed to replace this high-priced corn. And you're starting to see that. And when that happens, corn's the most efficient. You put the most gain on the quickest. When you start moving away from that, it starts affecting weights, performance. We're not going to feed cattle as heavy as we did before because of $6.5, $7 corn in the plains. And so the weights are going to start dropping, and demand still is pretty good. And so I think we're going to fix this situation pretty quickly. And then if corn stays at these levels, historically, every time in the past we've been at these, kind of historic highs in corn, it eventually starts dragging cattle and even feeders along for the ride. And so that's probably the next phase of this. If you stay at these levels for very long or higher in corn, is it's going to start dragging cattle and even feeders along with it to keep those margins, right? I mean, I'm not even being sarcastic here. Like, if it doesn't and corn stays there, like, you're going to break everyone, right? I mean, it has to adjust somehow, and the feeder fat spread has done some of the work. And if corn stays up here, I think it just has to drag live cattle along with it. And then you have this whole inflationary type backdrop that we haven't talked about. That's still ongoing. If the funds want to put any money to work and things start turning the corner in cattle, they have essentially no position in live cattle right now. They got out of their longs. They have a big long position in all the grains and hogs. But if they wanted to put some money at work, cattle is, of the raw material world right now, live cattle is probably a bargain or a value. So if you see some fund money start flowing back in at the same time, weights start dropping and cash kind of catches fire a little bit, you could see some good things in cattle here. But again, you gotta watch these margins, and the cattle producer right now needs a little bit of some good things happening. And I think you're possibly starting to turn that corner here with the action we've seen the last couple of days. Hopefully we can follow through, see some good gains today on Friday, and have a nice weekly close well off the lows in live cattle. And maybe that gets some interest, from some speculative money flowing in on the long side in cattle. And that would go a long way towards helping us out, I think.
Right on. Oh yeah, that's definitely something. There's just so many things going on right now, Chip. Plenty of stuff to pay attention to. Whatever plan you're working with, you probably need to go back and revise it. And if people are doing that, what's the best way to get a hold of you to get that guidance and that help on making that plan better for them?
Yeah, best way is just give us a call at the office, 309-550-7213. Love to talk to you. It's going to be a wild ride this summer, whether it's grains or livestock. There's going to be likely more volatility than we've seen in history. And it's great in the grains right now and hogs because it's straight up, but it won't stay like that. Volatility, I'm talking like, $10 swings in 3 days in hogs and cattle, and, 80-cent swings up and down in corn, $1 plus in beans. So it's really going to take some diligence, and it's going to be a rough ride this summer.
Yes, it will be. All right, Chip. Well, thanks for being on the podcast, man, and we'll catch up with you next week, especially when this report comes out, to pick your brain about what's going on there.
Sounds good. We'll talk to you soon, Casey.
All right, appreciate it. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast as well as any blogs that I have coming out. I got one that I'm going to post this weekend, kind of talking about the ecosystems of the ag equipment business and what that looks like and how those things all those moving parts work together here. So look for that. Also go to MovingIronLLC.com. You're going to find the entire library of the Moving Iron Podcast there, as well as all the blogs I've ever written. They'll all be posted there as well. And all the information for the Moving Iron Summit coming up here in Nashville, Tennessee, September 15th through the 17th. If you're interested in coming to that, go up to the navigation bar, click the Moving Iron Summit. All the information will be there, agendas, speaker information, room information, how to register for the meeting, all those kind of things will all be there for you to take a look at. So with that, I am Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me.